Well, good morning, everyone. Thomas Montgomery here. It's a beautiful Friday morning, September 2nd, 2022. We are at the front end of another glorious month. And so I want to make sure that we're doing everything that we can to help each of you, especially our white label partners, help at least 8 small businesses in the month of September. Why is that important? Well, it's like anything. If you don't do something often enough, you probably won't become proficient in it. Therefore, you won't be as good as what you could be or should be. And then the client doesn't get the best experience. But also, we want you to have a great income month in and month out, because we know if you're generating a lot of income by helping others, then you're very likely to continue on. So the commitment we have to you is to train and support. We'll do these Zoom webinars most weekday mornings at this time, as well as other training and support. But from your perspective, we just really need to have our eye on the ball of helping at least 8 clients a month. Today, our topic, and my screen should be shared with you, we're going to talk a little bit about loan packaging, because it's kind of viewed as, I'm trying to find a good analogy, like going and getting an immunization shot, right? Whether it be for TB or COVID or what have you. It serves a purpose, but usually no one gets really excited about going in and having their TB shot done every 10 years or whatever that is. Well, when it comes to a loan package, as we've talked about before, there's a lot of financial illiteracy. A lot of small business owners really, they don't know what a loan package is. They don't think that they need it, which means they're pre-contemplative. We have to educate them. And most small businesses that want to need capital, which is most of them, just simply say, I just want the funding, right? Just cut to the chase. I need money. I want money. Just get me funded. Well, the problem is, and you and I know, that lenders are not tooth fairies. And I'm not being sarcastic. It's not free money, right? There's some party, some entity, some organization, a bank or otherwise, on the other end of the transaction, and they have a responsibility to loan money to people that they think will pay them back, right? And you do the same thing, right? If you're running a bank, you would try to focus on loaning money to people that you think can and will pay you back. So the loan package tells that story. Now, we've talked about business plans, and there's different types or designs, content of business plans based upon the specific lender. There's financial projections that show what we think is going to happen in the future. If our business has been around, then there's financial reporting that shows what we've accomplished in the past. But frankly, none of that is our topic this morning. Instead, we're going to talk about the PFS, personal financial statement, and we would call this a support document. Not all lenders will require it, most will, and it's part of what we do to assist clients in improving their credibility. So again, I understand most small businesses don't care about loan packages. If they have a need for needing capital, they just want to be funded. Unfortunately, that's not the way the process works. If there's a want or a need, then you and I can assist them. We need to build the loan package and make sure that they're credible enough on paper to be able to be approved. So the PFS, the personal financial statement, is an example of one of those forms. Now, different lenders may have different formats of the PFS. And I've already disclosed, not all lenders will require this, just like with anything else. Not all lenders will require a business plan. Not all lenders will require financial projections. But the PFS, the personal financial statement, is an important document that in many cases we'll need. So I want to take a few minutes and talk to you about some of the typical pitfalls or mistakes that we see clients make when they complete it. And that's one of our resources that we provide, is to review the PFS and assist the client in strengthening it. Now, are we going to help the client lie? Of course not. Are we going to help the client cheat or steal? Of course not. But there are some subtle strategies that can help the borrower, in this case, the client, look stronger, look more credible on paper. So we are looking at the PFS form from the SBA. And again, and this is the typical template we'll use for all clients because it's standardized. But that doesn't mean that all clients are going to pursue an SBA loan, of course. Okay, so let's scroll down. I don't really care about the first page. You'll see that there's a date. Like all government documents, it'll have an approval number and an expiration date, but we're not so worried about that. Let's scroll on down to where we get to the meat of the matter. Some of these, most of the fields are painfully obvious, right? I don't need to describe to you what the person's name is or home address, what you need to put in the editable field, right? It's obvious. So I'm not going to waste your time with that. It is important, though, to recognize that a PFS is current or accurate technically only one day in time, right? Because it's a snapshot of where we are of the individuals. And I should go back and revisit that. Sometimes I make that assumption. So what is it that we're talking about? The personal financial statement. What's the first word? Personal. Oh, this is the business financial statement. For the love of God, no. This is the personal financial statement. So no, this is not the financials of the business. These are the assets and liabilities of the business owner. Maybe that seemed obvious. You'd be frightened how often people will ask you that. So we do ask, or it does ask for the business name of the business and business address as well. But what I wanted to get back to is that this is technically only accurate one day in time, right? Because every day we tend to have different cash balances and our liabilities change. So it is important that it's dated. Let's go through some of these fields here. Now, I used to be a school teacher. You've heard this, and it's a boring story, I'm sure. But in the public school system, we tend to teach students to read from top to bottom, from left to right. Ironically, the way that this form is meant to be completed is not that way. It's like, what does that mean? So actually, we should come back and fill in these sections last. It's kind of like an executive summary. These should be done last. So technically, we should scroll down and start with section 1, and then we'll come back and we'll get totals, because you'll see, like it says, section 4. Well, the amount that we're going to put here is going to be totaled up in section 4 below. So is it a bit confusing? I guess so, but if you just understand, we need to follow the sections, and then we come back and fill in the totals up here. So we'll come back and look at the top in a minute. So we have sources of income, salary, and salary could be from your own business. You and I know, well, hopefully you and I know, we encourage people to never be self-employed. It's like, what do you mean, Tom? That sounds craziness. Well, owning your own business, good thing, thumbs up. Setting yourself up on salary, a payroll, using a payroll service like ADP or QuickBooks Payroll, whatever you want to use, paying yourself on a regular basis via direct deposits, thumbs up. Taking extra money above that salary out as profit distributions or dividends, thumbs up. But we don't want to be considered self-employed. And I often talk, we have a new client, he's a realtor, very successful, recently relocated, Ryan's his name, recently relocated to Florida. And so he's doing like a hybrid of this. He's a realtor, so of course his income's not always smooth. It has ebbs and flows, but he'll take salary the way that we're kind of teaching and preaching, but periodically. What we need to do is have consistency. So the lending world likes to see W-2 employees. You, I, we all should be W-2 employees of the company that we own. And we cover that in a different topic, 27 mistakes. So this is salary that would fall under that category, net investment income, real estate income, and then any other income. So anytime that we see parentheses, it says describe below, it should always be described below. And so if I'm an insurance agent and I get paid 1099 and it's not captured in the above income, then I would describe it down here in section 1. Makes sense, right? If I have any contingent liabilities, that's where those are listed. Let's go on down through the sections and we'll come back up to the top. Money owed to others. Again, as an individual, this is not the business financial statement. This is the personal financial statement. Stocks and bonds. And this is the first point I'll bring to your attention, where we often see small businesses understate their net worth. Because let's go back up to why this is important before we dig into the details. So the personal financial statement is commonly used by lenders, not all lenders, to assess as part of the assessment of the borrower. In other words, what's their net worth? What kind of assets do they have? Have they managed their affairs in the past? You and I want every one of our clients to have a high net worth. And so that bottom line comes down right here, which I know we've not talked about yet, net worth. So if we have a client that has a low net worth, we need to regroup and consider revising legally, ethically, and morally their personal financial statement. I wouldn't ever want to see a net worth below 100,000, and I'd prefer to see it at 250,000 or above before we go to funding. Is that a requirement of the lenders? No, but what we know is the stronger we look on paper, the more credible we are, the more access to capital. So going back to stocks and bonds. Well, they might have stocks and bonds that they thought about, but they also own their own company, right? We've got Mr. Barchi on the line. Mr. Barchi owns his own company. It has value. And so he needs to list the ownership of his company, as well as if he owns any of Tesla or General Motors or what have you. So that's the first often overlooked or understated element. Now, that gets a little complicated because Mr. Barchi's company isn't publicly traded. And so you might say, well, yeah, I own it, but I don't know exactly what the valuation of it is worth. And we can work on that together. But this is the first element we often see people understate their net worth. Real estate owned is pretty obvious. Normally you would put your primary residence in A, any rental properties or other properties in B and C, and we can add additional sheets as necessary. That's pretty straightforward. Section 5 is the second area that we often see people understate their net worth. And a lot of times we'll see that they just put 0, especially right here. They'll just type in 0. And so the way I like to look at it, I'll scroll back down to section 5, is think about it if you went to your State Farm or Geico insurance agent and said, hey, I need to get coverage for my personal property in case a fire hit my home or my apartment or tornado or what have you. You know, what would it take to replace all your contents and you know, to replace all your pots and pans and furniture and so forth, clothing. And that often, so we're not looking to lie, cheat, or steal, but that's often a significant amount. You probably would have 50 to 75,000 or more in rental coverage, replacement coverage, in case your homestead were destroyed, right? So, and we hope that would never happen. So anytime that we see someone that puts in 0, it's an indication of financial illiteracy, right? Because, and you can be sarcastic with them, which I wouldn't be, but just playing here on our Zoom. Let's say that Shondell put 0 for a personal property. And say, oh, Shondell, I did not realize your circumstance. I did not realize you don't have any shoes to wear. And she said, well, no, dumbass Tom, I've got shoes. I got several pair of shoes. Well, you told us you had no personal property. I didn't realize that you didn't have any plates or silverware. And so you can see the hyperbole, the exaggeration. But personal property, nearly everyone, I mean, there's some less fortunate than you and I, but nearly everyone has personal property. So that often is an amount of 50,000 or more. So the first often overlooked asset is stocks and bonds, including their own business. Personal property often is understated, unfortunately. Unpaid taxes is pretty obvious. Other money owed, section 7 is pretty obvious. Section 8, people tend to butcher this. I even have insurance agents that butcher this. You know, it asks for provide the face amount and the cash surrender value. But when we get up here to life insurance, what does it say? Cash surrender value. And I'll have these people that'll put in like $500,000. And it's like, really? I mean, that's possible, I know, but really, you have $500,000 of cash surrender value right now. And what kind of policy is it? It's a term policy. And again, just so much financial illiteracy. So that is another of the common mistakes that we see. So theoretically, you get this, you fill out the header, fill out the sections. We get down to section 8, that was the last section. And then now we can go fill out the top, which is kind of like the executive summary of a business plan. So how much cash on hand and in banks do we have? This is of the individual, not of the business. We put the number in. How much in our savings accounts? How much in IRA or retirement accounts? And if we have anything, this must be described in section 5. So you can't just put some number in here and then not have described it or defended it in section 5. Makes sense? Any money that's owed to you as an individual, cash surrender value of life insurance, which we just covered. And so you might say, well, what if some of these are zeros, or most of them are zeros? Well, it is what it is. We're not going to lie, cheat, or steal, but I can show you some ways to finesse it in a second. Stocks and bonds comes from section 3. Real estate comes from section 4. Automobiles are described in section 5. Now, automobiles and real estate here, just keep in mind, this is current market value. Like I just bought a Grand Cherokee, I'm sorry, not a Grand Cherokee, Grand Wagoneer, really nice vehicle. And so it cost me $98,500. But the truth is, the moment I drove it off that lot, I don't know, I'd have to look to see what it's worth, but it's probably only worth $85,000. Now I have other vehicles, but I'm just doing this as a simple. Now I have to pay monthly payments, and I don't know, I think the payment's like $1,700 a month. I haven't paid the first payment, just bought it. And I owe probably on it, because I didn't put any money down, probably, I think it was like $101,000 I owe on that vehicle. So you can see technically on this one vehicle, I'm upside down, but I'm listing current market value. And again, the sticker value is $98,500, but could I really go sell it for 90? Is it really worth $98,500? Not anymore once you drive it off the lot. And maybe it's worth a little bit more. I don't know. We could look at Kelley Blue Book. But so that's the market value. This is what I owe against it, which I believe is true. And then this, it's not a round number, but it's about that, the monthly payment. So some people, you got to recognize the value of the asset over here, the value of the liability over here, and then the monthly payment there. You see? So you count it on both sides. The automobile is both an asset and a liability. I have another vehicle. I have a 1981 Jeep CJ7. So let's use it. It's probably worth, it's like collector quality. It's probably worth $30,000. Well, I don't owe anything on it. It's free and clear, and there is no monthly payment on it. So you can see you could have a vehicle that's only on one side, an asset only. But if you owe on it, you got to record the liability as well. Other personal property we talked about down in section 5, any other assets in section 5. And so then what do? You add all these up. You add them all up. That's what total means, isn't it? Then we get over to liabilities, accounts payable, money that we owe to others, notes payable to bank and others that would be described in section 2. This is a cumulative amount of automobiles. And so in my case, unfortunately, I have multiple vehicles. So I got to pay for the S560. I got to pay for the Grand Wagoneer. I got to pay for all these car loans for whatever reason I have. And so this is the cumulative amount, let's say 300,000, and it's probably like 6,000 a month or so. Any other installment accounts, if you have any loans against life insurance, mortgages on real estate. So again, you might own real estate, and so maybe your house is worth 500,000 and maybe you don't have a mortgage against it. So you record the asset here, nothing here. But let's say you owed 400,000 on it. Then we got to record both, the value of it and what we owe. If there's any unpaid taxes, which would be described on section 6, any other liabilities, which would be described on 7. Now, this is where it gets confusing, and I'll talk about some strategies to inflate net worth in just a second. So with the liabilities, here is the total, and I know it's not bolded, it doesn't seem right, but this is the total amount of all these liabilities. Now, in this case, it's auto-calculating, but you need to know how to do it in case it doesn't auto-calculate for you. So then technically the difference between the assets and liabilities is your net worth. So using this simple example, this person's net worth would be 100,000. Their total assets is 530. Their total liabilities is 430. And so you subtract liabilities from assets, there's a net worth. And what it's saying is this total must equal this total. It's an accounting formula. Terrence is online, he's a CPA. Assets equals liabilities plus net worth. Okay, so now let's wrap it up in just a couple bullet points. So that's a quick primer, quick overview how to complete this. And we have a step-by-step guide that'll walk you through it if you need more help. But what are some things that you can do legally and ethically, morally, in compliance to improve one's net worth? Because we don't want any client to have less than 100,000, and we'd really prefer them to have at least 250,000. So let's talk about a couple strategies to improve net worth. Well, first of all, make sure that we're accurately recording assets and liabilities. That's where it starts. And we talked about a lot of people skip personal property. So it's like, oh, shoot, I forgot. I got $75,000 of weapons and jewelry and whatever it is, right? So all of a sudden that helped. And then that just changed. So I'll have to recalculate the net worth. So that's one thing. Make sure that we're capturing our personal property and our stocks and bonds. We talked about that. Beyond that, what we can do is we can add assets to the client's personal financial statement, legally, ethically, and morally. And what we would do is we would do it on this line right here. So let's say the client comes in, they don't have at least 250,000 of personal net worth. I would recommend that we add some assets, and we can add assets right here. We could add 100,000 of assets, or we could add $200,000 of assets, and those are going to be real. And so it becomes a new asset, a new receivable of the client, calculated in their assets, and then that increases their net worth, which I realize I didn't plug in the numbers. You understand, we're talking about doing it here where the nines are. All right, so let's stop for a moment and see what questions you have about what is a personal financial statement, why is it used by lenders, how is it structured, how to complete it, and then also how to optimize it. So again, how do we optimize it? Make sure we've calculated properly, of course. Make sure we haven't missed stocks and bonds, including the company that we own ourselves. Make sure we've not skipped our other personal property. And then if needed, if it doesn't gel out, then what we need to most likely do is go add accounts and notes receivable. And that's something that you and I can help clients with. It's called the Collateral Support Program, CSP. And so we can add enough assets to make them look more credible. We're not lying, we're not cheating, we wouldn't get in any trouble. It's truly adding assets to the client's personal financial statement. Who has questions about any of this information? If you're a white label partner, you may very well be involved with completing this. If you're not a white label partner, then our team, our in-house mentors, will be doing this with clients. But I think it's good for you to know because, again, I think so often clients dismiss that there's any value of, I don't need a loan package. Well, dumbass, you do need a loan package if you want a business loan because we have to be able to qualify it for it. We need to look credible. And there's different things that go into the loan package. This is just one example, but there are things that we can do to improve our personal financial statement so it looks strong. So what can I do to assist any of you in understanding, at least at a high level, what the personal financial statement is? Questions, comments, concerns? All right, well, you're a quiet group today, so we will be back together on, well, Monday is Labor Day, so we won't be together Monday. We'll be back together Tuesday morning at 8 o'clock Central. Let's make it a productive weekend. I know we're off to an incredible start, and we're only one day in to September. So we just want to make sure that you're on track to hit 8 or more conversions, 8 or more client enrollments, whether it be of access to capital or new guaranteed financing, which is the same as Capital Ready, or even the SBA Express or the Startup Funding Program. There's so many small businesses that want and need capital. They need your help. They may not know they need your help. We've talked about different lead sources this week, including the Synergy Direct lead source and others that are available. There's just no reason that you can't help at least 8 clients in the month of September and earn approximately $100,000 for doing so. All right, thanks everyone. We'll see you back on Tuesday morning. Let us know if we can help you between now and then. Bye-bye.